Hello there, Joe Pryor again, and we're going to run through these next two modules. I think you're going to find these to be very, very important because they're critical to your success. And the first one comes with finding someone that really understands real estate investment. And the second part of this will really explain it in detail. But here's the thing. I've been in real estate now for almost 35 years. The one thing that I know that has been taught to realtors is do a little bit of everything. Do a little bit of listing, a little bit of putting people in your car who buy, apartment conversions, fix and flip, and long-term investors. And so you know a little bit kind of about everything, but not necessarily knowing a lot about something. For instance, I know some people that are just the best listing realtors I've ever seen. And that's what they do extremely well. And they stay with that. And same way with me and some other people out there. We don't want to be all things to all people. We want to be one thing to certain people. And what that means is that every waking moment, anything that I study, any demographics, economics, return on investment analysis, what's going on with interest rates, everything that has to do with real estate investment is something that I spend 100% of my time, and my team does exactly that also. So what that means is that our knowledge base is always geared to what your needs are. What is the best thing for you? And that's what you need to look for. The thing is, a good buy is not necessarily a good investment. There's a lot of things that can knock that out. It may be a good buy. Maybe it's $20,000 or something like that under value. But if it doesn't rent, if it needs a lot of maintenance, vacancy, whatever, then it's not necessarily a good investment. If it's not in an area that appreciates well, it's not necessarily a good investment. And believe me, there's a difference between the two. And so that's what you need to identify. And what we're going to really get into in the next module about what are the metrics for all of this. But it requires specialized knowledge and experience, specialized training, something that I've done both residentially and commercially. And that's what you need to look for, because the right house there, as you see in this picture, is gold for you and the other ones are not. The thing about an investment specialist is they have developed a turnkey setup with real professionals. You see a baseball team here, and you know things about baseball. You know that everybody has a unique position. The catcher, the center fielder, who's normally the center fielder, the fastest person, the catcher who's kind of got a mind for what the right calls are, the shortstop that's got range. Everybody plays their part, and they have got to work together as a team. That's what a specialist does. They get the best pros in the business, the major leaguers, the people that are going to give you the best service, the best rates, the best advice, the best communication. And this is what you've got to look for. And an investment specialist has all of this. The thing about a turnkey solution is about the only way, if you're looking for passive income versus active income, like a fix and flip. If you're looking at, I want to hold this for the next 25 years and rent it, this is what the team does. They turn your home into money and they manage your wealth, and they're concerned about your wealth. As I've said probably more than once through this set of classes, our responsibility every day is to give you the life you deserve and the family security, all right, that you need also. And so, for us, it's very simple. I don't know if you're familiar with Joseph Campbell, but it's the hero's journey. We're the guide. We're the people to make you the hero and your family the hero. So that's what a specialist does. That's what a great team, a turnkey solution will do for you. And a turnkey solution gives you the gift of time. So it's just every bit as important as money. I know mine just keeps passing by faster and faster. So spending time with my wife, with my friends, with family, with recreation, with travel, everything else, it's something that building up this wealth has done for our family. And it's the same thing for you. These are the things that you look back on at some point in life and say, wow, I did have the time to do that. And I had the income, to take my kids to the soccer game, to see my son play baseball, whatever it happens to be. This is what we want to do, and what any investment specialist want to do for you is to create wealth, but also create the gift of time so you have this kind of time. But here's the thing, guys, and we're going to go into this, I think, in detail, because this is the most important thing. And talking about an investment specialist. We're going to talk about what they know and what a lot of realtors don't know. And this is crucial. This is critical for your success. Think about this for a second. Think about, well, wonder what the capitalization rate or cash on cash, or what is the gross rent multiplier of that property? Can you compute the internal rate of return? And this is what it looks like. It's like, the theory of relativity. I'm sorry, I'm not Albert Einstein. I don't get it. And that's the problem going into this. If you don't know it and you're dealing with somebody that doesn't know it, then there's a real problem here. And you're going to have a real problem getting the right investment, not just the good buy. So let's kind of go into the details of this. And this is just the beginning. And by the way, later, we're going to have a module where I take you through an Excel spreadsheet. And together, we're going to see how these numbers are entered in, talk about what they mean, and then you're going to get all these details about things like cap rate. Now, cap rate includes your net operating income, but does not include debt service, which is principal and interest. This is a lot more important in commercial. I wouldn't poo-poo it and say it's not important in residential. You're going to see some other things that I think are going to be more important to you, but it's one of the parameters that we use, and it's done in a percentage. Now, the first one, the second one, the third one, things you're going to see, we're going to talk about them as a snapshot. In other words, basically, they're going to be 1 year kind of analyses. What you're going to need to know before you get into that property in the first year. And it can be misused. I've seen people put together these things and they leave out a lot of details. They leave out vacancy, maintenance, property management fees, so that they can pump the numbers up. You need the kitchen sink analysis and everything here that we're going to go through. And that's what you're going to see when we do that Excel spreadsheet together. Now, this is more important, I think, for you because cash on cash is ultimately going to measure the amount of money that you put out and what you're getting back before tax and after tax, year in and year out. So in other words, when we do this, if you put out $50,000, all right, and you get $2,500 back, for instance, of that $50,000 investment, then what we're talking about is a 5% cash on cash return. It can be negative, and we're going to show you that, but that doesn't necessarily mean it's a bad investment, but it is a metric that say, am I going to get my real money back within a certain amount of time and so I can reinvest it? Or do I just kind of, stay neutral, but at the end of 7 or 10 years, the appreciation builds my wealth? So, it deals with the actual cash invested, and it doesn't have to be a positive number. Now, we want a wildly negative number, and we'll show you a little bit more about that later. Gross rent multiplier. It's not used a lot in residential, but I think it's kind of cool. I think it's kind of a good thing. It does not include property taxes, insurance, and utilities. You're going to see these webinars sometime and say, well, you should have a 1% of the investment for rent or 2% of the investment. That's okay. That's not bad, but it doesn't include all of your expenses. And again, it's just based on the first year. I would say this is not your prime indicator, but I will tell you this. One thing that it does do is it tells you how close you are, to the purchase price with the rent. And so, that might mean that, if you could choose between a $300,000 and $250,000 property and you get the same amount of rent, well, it makes a lot of sense when you see the gross rent multiplier on the $250,000 property. So it is one thing that we do. Now, here's the big one. That is called internal rate of return. This is simply put, as this says, the annual percentage rate of return for each dollar invested for the period of time it is invested, as long as you keep it in the investment. So think of this as a video, because this is what I'm going to compute for you later. I'm going to show you how we take it out 7 years. So therefore, it's going to give you an annualized return on your money over that period of 7 years and at the end of 7 years. And it's a kitchen sink, and it includes everything: vacancy, maintenance, selling costs, you name it. And it's going to show you a before tax and after tax return percentage, as well as saying, here's your wealth position that you created. So this is the one that I think is most important, especially if you're a long-term hold. Even if it's a VRBO, Airbnb, or, something you're going to keep for a long-term rental. So this is critical for you to understand. And so that's what you're going to see. And I tell you what, the thing that I like about this is I can compare it to what's my return in the stock market? What's my return on annuities? What's my savings account return? What is inflation? How does this stack up against all those other numbers? Because it may help you make a decision of where you invest, how you invest, what you invest in. So we're going to see this, and it's going to compute these other things too, but you're going to see how this is an important factor. You know, the most important thing about this is once you analyze these numbers, once you understand it, and believe me, an investment specialist is going to spend a lot of time with you. In other words, you know, I don't expect you just from this short period of time to understand everything that I just said or whatever, but it's the beginning. You can Google it, you can try it out. But, you know, this is what I do with investors. This is what a specialist does with investors. They want to make sure you see it. They want to make sure that you understand it so that you know what you're getting into. Then at that point, instead of that first slide you saw with the theory of relativity or whatever it was, then 12 minus 5 equals 7. That's how simple it can be once we get into those metrics. And believe me, it's not rocket science, all right? It is something that you'll understand. It's something extremely important to you. It's something that you should know about and have in your hands before you ever sign a contract for a property. This is the way that you can say, okay, based on expectations, based on historical data, and based on these numbers, I'm either going to move forward or I'm not. So that's those two things together. And I'm going to spend a little bit more time once we get into that Excel spreadsheet, because I want you to see it in action. And it's just another way where you can see all the numbers going in that create the computations for this. So the next module is going to be choosing a market before choosing the investment property. Again, remember, we talked about those 3 different types of markets, certain things that are going to work. This is going to work in your risk management system and how you feel about real estate and how you feel comfortable in the place that you're going to do it. So stay tuned. We got a lot more coming for you.